Hey everyone, welcome back. This video is going to introduce another one of my custom indicators. This is probably another indicator that you've probably never seen before, but it's really interesting, and I think you're going to like it. So let's get right into it. I've got a monitor over here, so I'm going to be looking over here to describe this. So this we're looking at a chart of the SPX daily chart, and the indicator are these green and red lines. And so what these lines do is they project forward into the future the highest body high and the lowest body low for the last 12 sessions. Now, the number 12 is a little bit arbitrary. You have to pick a number. Yeah, and you're going to see, I'll show you some examples here where, I wish I had a longer number, like a larger number so that it held the line for longer, and other times where I wish it was shorter. So you kind of have to just pick a line. So I played around with a bunch of different numbers, and 12 seemed like a good one for me. But let's see what happens here. So this is the SPX, and this is this giant consolidation period that we went through at the beginning of the year through January and into February. But what you'll notice is that price comes back to the highest body high, and that usually acts as resistance, and likewise for support, right? So, like down here, I came down, it filtered down, and then here you've got the lowest body low, which is from this red candle projecting forward, and then look, it comes right down and it wicks through it. It doesn't always wick below the wick low here. So it doesn't always make a new low. In this case, it did just slightly, but the body low is really, really key. And it's amazing how often in any time frame, you can mark out the body high and the body low for a certain number of sessions. 12 is just a number, but on the half-hour chart, 30-minute chart, 15-minute chart, hourly chart, you can do this anywhere. And it's remarkable how the market will respect body lows and body highs. So again, here it wicked down and grabbed that line. It came down and did it again right here, and then down here. Now here it actually raised up a little bit because the 12 expired, right? So now it goes to the highest one for the last 12, which is a little bit higher. But again, the market went down, and then here it crashed through it and went down further. But you'll see here at the top as well, like it made these highs and then it came down. Now here, by the way, it crashed through the line, right? It went lower than the line, and then it came back the next day. But then what did it do? It came back up, and it just hit the body high here. And again, in this case, it went slightly higher, but it was resistance. This was basically the top, and then through here, it didn't quite get to the body high. It got so close, but that acted as resistance. And then where did it go? It came back down to the lowest body low. So, and you'll see this over and over. Now, here's an example right here of how I picked the number 12. So 12 sessions, in this case, 12 trading days. It's 2.5 weeks. And then it starts following higher. But I wish it was, in some cases, it held that line longer, because here, which is basically a month later, what did it do? It came down and it wicked right down to the body low. So it does this over and over and over again. Same thing up here, where the line has come down because the 12 periods has expired. But what happens when it came back up? Well, it went right back up to this previous one here. So anytime you could effectively have a watch list that shows any symbol that you have in your watch list, whatever watch list you're following. You could have a scan that shows which stocks, which names on that watch list have a high that's higher than the highest body high from yesterday, from the last 12 sessions, or whatever number you pick, or a low which is lower than the lowest body low of from yesterday of the last 12 sessions, or 16 or 20 sessions, or whatever it is. And any stock that comes up on that scan, it's worth taking a look and seeing, is there a trade here? Like for we already talked about these ones here, but if you go back, you can see this happens over and over again, right? Here's another one where it came down and it wicked down below the lowest body low, which was this one right here, wicked down below it, and then that was support, and it popped back up. Same thing happened right here, right? It wicked down below the lowest body low, which was from this cluster of consolidation, wicked below it, and then the next day it popped back up. Here's another one. Now here is one where the number 12 was too long because it actually didn't get up that high until the next day. So, but nevertheless, it came down to a recent body low and found support there, right? So you can see this over and over. And this is true for all kinds of, I mean, here's another great example where it came up to the highest body high of the last 12 sessions. That was resistance and came back down. What did it do? It found support at the lowest body low, popped back up. Now that didn't last long and it crashed through it, but you can see that it's respected over and over again. You can see it here as well. Now this is only the broad index, the SPY, but you can look at any like let's look at Nvidia just to see what's up here. I mean, here it's happening over and over again. You can see how these lines have importance. Look at this, unbelievable. And then here it crashed through, so it went lower. So again, nothing in the stock market is guaranteed, okay? But these lines are important to have on your chart. They give you context of where the market's been in the last 12 sessions or whatever number you pick. And that's an important number to, or an important level to look at on your charts. So if you go back further, here you can see these things. This happens over and over again, right? Where it gets to the body high, the highest body high that finds resistance. It happened here. Here it went to the body low, found support. Here it crashed through, so it went lower, okay? And then it came back up. Where did it go to? It went to the highest body high, consolidated. Then it popped up higher, crossing beyond this one here from back here, right? And then it went a little bit higher, and then it came right back down. Where did it go? To the body low, found support, came back up. Didn't quite get to the body high, but it was pretty darn close. So these things let's look at a few others just to see what, let's look at Costco. I mean, you can see this on any chart. So look at all these. It's incredible. So here it found resistance. Here it found support. Here it found resistance. Here it found support for a day or two. Then it crashed lower, came back up. It went right to the body high. It went a little bit higher, but not much. Found resistance, came back down. Now it went to this line, which had expired because 12 periods had already run out. But that's exactly where it found support. Came back up, and it didn't quite get. Look at that. That's incredible. Didn't quite get to the body high, but it got within pennies. Found support. Then it crashed through. Found a new bottom, and then what did it do? It came back up and found the high, which is the highest body high of the last 12 sessions. And you see this over and over and over again. Look at this. Here it came back down to the line, which was here. And so it opened below it. That would have been a great buy. Here it came back down and wicked right down below the body low. And then here it found support. And at the top, it found resistance here. Here it went higher, right? But then afterwards, it came back up. It didn't quite touch it. If it touched it, there would be a split in this line because it doesn't print the line if the low has crossed it. So it didn't quite get there, but it got pretty close. Here, it got to the body high. So it's pretty remarkable. Let's just look at a couple of others. Let's look at Apple. Same thing. Came back down within pennies of the low of the body low. Came back up, hit the body high, found resistance. Found support for a day or two at the body low, then it crashed lower. But where did it go to? It went right down to this body low. See that? Like if you look at the line, it goes right across, it just wicked through it right there with a few pennies, found support twice, and then it came back up. And then look at this, it tested it one more time, 3 times, and it just wicked below it, and then it went on its merry way. This is incredible. So these are indicators that I code all kinds of custom indicators. Look at this. It's incredible. It just happens over and over and over again. That's why I created this indicator. Look at this. So you can see this, and you can put this on your own charts. I've coded it obviously in Thinkorswim, but these are very useful charts. And my point is, you have to keep in mind what's the lowest body low, what's the highest body high over the last 2 weeks, 3 weeks on the daily chart. 10, 15 candles on the 30-minute chart, on the 15-minute chart. You will be amazed at how much these levels are respected. Thanks so much for watching this video. We'll see you on the next one. Bye-bye.